Palantir, why I'm buying more shares. Palantir's artificial intelligence platform, AIP, has accelerated the company's growth in recent quarters and helped its shares greatly appreciate in the last year. At this stage, Palantir has everything going for it to continue to generate impressive returns and exceed expectations in the foreseeable future. The expansion of Palantir's total addressable market, the TAM, creates new growth opportunities for the company and its shareholders. Considering that some risks still remain, I consider Palantir a high-risk, high-reward play. I beg to differ right off the bat, okay? I don't actually consider Palantir a high-risk, high-reward play. I own plenty of stocks that are high-risk, high-reward. Now, if you're wondering, like, can the stock price go down 30%, 40% in a bad market? Sure, right? Sure. But that's not what I consider high risk. What I consider high risk is like a company like going bankrupt, like a company going down a lot and staying down. Palantir, I don't think there's a super high probability that Palantir stock was to go down significantly and stay down because of how many game-changing products they have out there, the product suite, and their balance sheet, how good of a position that is, having Alex Karp lead this company and the current executive team there. So I just don't look at it as a high-risk play, to be honest. It's a very volatile stock, but to me, a volatile stock does not mean high risk. Like, oh, this company could go BK. That's high risk. Then we're talking about a whole different situation. Oh, this stock could like go down a bunch and never come back. Like that's a whole different game, right? So here he talks about, if we go through Palantir's latest earnings report for Q1, which was released last month, we'll see that its revenues increased at an impressive double-digit rate, 20.8% year over year, to $634 million and beat estimates by $16 million. At the same point, the company's net income stood at $106 million in Q1, the sixth consecutive GAAP profitable quarter. Absolutely. In the latest letter to shareholders, Palantir CEO Alex Karp stated that in Q1 alone, his team conducted over 660 boot camps to various enterprises, which might indicate that the demand for AIP remains strong. I think it does. I think it does. Add to this that the fact that Q1 Palantir's customer count increased by an impressive 42% year over year to 554, while its commercial revenue rose 27% year over year to $299 million. And it makes sense to believe the company's commercial business is likely to continue to grow at an aggressive rate for the foreseeable future. Yes. And I don't think that commercial growth is slowing down anytime soon. If anything, I think we're still in an acceleration mode in terms of that actual revenue growth there, right? I think, we're still very early days in terms of all these software companies actually making money from AI. And so Palantir, we got a long way to run here. Here it talks about defense, which defense is really exciting. And that hasn't been an exciting business for quite some time. But defense, all of a sudden we're seeing deal after deal after deal after deal come through. Don't be surprised if you see those defense numbers, or I want to say defense numbers, the government numbers come in much stronger than folks are anticipating right now. Now I talk about what's next for Palantir. It talks about valuation a bit, right? Looking at DCF model here. So the projection period, looking out, we'll look to 2028 here, right? Looks like they have about 21% revenue growth here over the years, right? Compounded annual growth rate. And looks like overall, so it looks like he's got earnings before interest, amortization, and taxes. Looks like he's got here $1.5 billion in 2028. The model shows that Palantir's fair value is only $18.10, which is below the current price at 23%. Yeah. The problem is, if you're trying to value Palantir just based upon, where this company's at now, it's going to look like a ripoff, right? I mean, the bottom line is, if I pull up Palantir here on 1000X, the forward P's at, 78 or something like that. So, but that's just not the right way to kind of look at Palantir, in my personal opinion. You got to think about where the net, in my opinion, some people like to think about cash flow. I like to think about where's the net income going over the coming years, right? And when I think about Palantir, their net income margin should be, I think long-term their net income margin is going to be in the 30 to 40% range. So when we're thinking about 30 to 40% range, think of it as a company does $10 billion of revenue. That means you're throwing off $3 to $4 billion of net income. And so, and I don't think that's crazy at all to imagine Palantir is going to get to that place sooner rather than later, right? And when it comes to the revenue growth, I think that's also a hard thing to forecast right now, because right now the company's quarter after quarter after quarter is seeing their revenue accelerate. It went from like 12% to like 16% to it was like 19%. Now it's 20 plus percent the latest quarter. Maybe we go to 20 this next quarter. I would say low end probably 22%, high end probably 24%, maybe higher. So we're in a revenue acceleration cycle. So I think it's actually really difficult to even project what Palantir's revenues are going to be in terms of on a CAGR basis. And remember, Alex Karp years ago said the company he thinks can grow to 30% CAGR when it comes to revenue, right? And that was before they ever launched AIP, way before. And that was way before the world was excited about artificial intelligence and the world kind of came to Palantir. So I think right now, if you just look at Palantir from a valuation basis, I think it's hard to say Palantir's cheap. But I think if you've got a longer term horizon, I think you look at this stock and you're like, oh, if you're actually on this bull ride, it's going to be a lot of fun. And you just got to hang on for dear life, right? And I spoke about Palantir more in depth today, actually, on the main channel. I did a video called 3 stocks to buy under $25. And Palantir was one of the stocks featured on there, which, by the way, a good thing I did that video, because all of a sudden Palantir is $25 here today. And when I thought about that video last week, and I kind of planned out what 3 stocks I was going to talk about. And at that time, Palantir was 20 or 23. And so I was like, oh, I'm fine. And next thing you know, it's 25. I'm like, come on, Palantir, you're going up too fast here. Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search. It's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen to it at 2x speed, I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. All right, let's get in this one. 3 buys and a bail. Broadcom, Chipotle, Walmart, Nvidia. This should be interesting.
At KKM Financial and a CNBC contributor. Jeff, welcome. We appreciate it.
Before we can get into this, I wanted to show you guys this here on 1000x, right? Look at Chipotle's valuation. Look at Nvidia's valuation. Look at Wingstop's valuation. And the reason I want to show you guys that is Nvidia gets all the talk and the hype in the market. The growth rates are absolutely mind-blowing for Nvidia, right? We all know that. I mean, look at the numbers. And then look at Wingstop and look at Chipotle. And it's not like Wingstop and Chipotle numbers are bad. It's just, if you want to make a case for a bubble in the market, I just don't know if the best case is Nvidia. I think there's better cases to be made in a stock maybe like a Chipotle or a Wingstop. Just logically, forward P is 61 on Chipotle. Wingstop's at 128 forward PE. Woo! I mean, those are some numbers there, right? And I mean, remember, those are like low margin businesses compared to something like an Nvidia, right? So I don't know. That's just something to kind of consider in regards to these stocks. But let's listen to this gentleman and react.
Let's start with Broadcom. They announced a 10-for-1 split in that stronger than expected earnings report last Wednesday. It takes effect in July. The shares are up 4% today as semis continue to surge, and they are up more than 20% since the announcement. Do you think the momentum continues here?
Wow.
I think it does, and Broadcom's a buy for me here because of that momentum. And it's really interesting. We're going to talk about all these stock splits, and it's almost like in 2024, Kelly, stock splits means buybacks. And fundamentally, and for all those years prior to this year, you really haven't had a reason to buy a company due to a stock split when you think about the price being reduced. But at the end of the day, Broadcom has more room to run. And it follows that other semiconductor, a little company called NVIDIA, we will see this market move higher. It's up 20% to your point in the last 2 days. But here we are at 1830 as the sixth largest semi. It almost feels like this name is like at a discount. It's under $1 trillion. NVIDIA now above $3 trillion, not going to $4 trillion. Why not buy it on discount? But I think it's more of a momentum play. I do get also excited about the fact that they bought VMware, and that VMware is going to help them be a little more diversified if the air comes out of the AI balloon. And we do see the way they're working towards networking. That's about 40% of their top line. So I get excited about a little bit of diversification.
All right. Real quickly, and a follow-up to that, what's your strategy now with NVIDIA itself, Jeff?
Well, NVIDIA itself, we're going to get to that at the very end here, I think. But it's interesting to see this parabolic move. They talked about the stock split. It added $1 trillion with a capital T. Subsequent to that stock announcement, it's still moving higher. It's like the pedal is stuck to the metal. And I think we're going to have a moment in time here. We're going to look back at possibly this conversation, if it's a day, if it's a week, if it's a month from now. But this isn't overbought territory. But these parabolic moves, they are widowmakers.
I beat myself to it. We'll explain in a moment, but let's get to that next buy then. Chipotle, totally different space. They announced a 50-to-1 split a while ago. It was the biggest split in NYSE history. This was back in March. They had to wait for a shareholder vote. They're going to split actually in about 2 weeks now, and the shares are up 20%. Do you stick with the stock here?
I think you do, and it's not cheap by any means, but I want to be a buyer here at Chipotle. Trading at a forward P of 59 times. That's near its all-time high in the last 5 years. But I think when you think about this company, I know it's almost like a micro cap, Kelly. It's only a $91 billion market capitalization, but I think they're continuing to expand, and they're actually eating and stealing McDonald's lunch. If you're going to pay $20 for a Happy Meal or a Big Mac, why not buy a $14 or $15 carnitas bowl? Because the food seems fresher, and you're seeing the momentum in Chipotle.
What? A Happy Meal is not $20, sir. Okay. What? Sir, prices have gone up, but a Happy Meal is not $20, okay? You must not have young children. Holy smokes.
This is a name I think will continue to move higher, and at $3,375, it will make more sense when they have that massive 50-to-1 stock split.
All right, and then we move on.
Yeah, the stock split, I mean, it's obviously super bullish for that. That's honestly the only reason this stock is still going up, in my personal opinion, in the short term. The only reason is that stock split. If they didn't come out with that, I could tell you this stock baby would already been going down. But at the end of the day, you can't jump in front of this one right now. In the short term, after the stock split, I think things are going to get very interesting.
Walmart, which I don't even think of as a stock splitter, but it is. It kicked this whole thing off practically at the end of January, announcing a 3-for-1 split, and the shares are up 20% since then. And they're up 14% since that split took effect at the end of February. And you're sticking with it, despite any concerns about the consumer.
No, I am. And if the consumer does show a little more weakness, because there are some cracks in the consumer, I think Walmart thrives in that situation. So almost buying Walmart or staying with Walmart is almost like a hedge here. But if you think about this name, $550 billion company with 10,000 stores globally, they're reaching so many folks. And yes, this is traded at a very high PE compared to its 5-year average, but I think it makes a ton of sense here because we are seeing 240 million customers served weekly globally. And as they continue to maybe think about AI or think about more reach, they have the audience. So I like Walmart here. And if anything, Kelly, it is an offset if we do see, for some reason, AI's air come out of the balloon.
All right.
Yeah, Walmart's been very impressive in terms of the numbers this company's put up over this past couple of years, I would say, really like the last 2 years. But something very important you got to consider here, right? Walmart sells, I mean, it's all most of what people go to Walmart for is all base needs, right? You need some toothpaste, you need some mouthwash, you need some deodorant, and you need some food-related stuff. A lot of people do food shopping at Walmart. Well, they're one of the best beneficiaries of inflation you can think of, because if all the prices of all those things go up, Walmart's going to be able to go up over time, right? And then they can usually offset costs much better than their competition, which then sends more customers their way, right? And Walmart's always just known psychologically as like the cheapest place you go for something. Like if you need a bottle of Heinz ketchup, right? People naturally just think like Walmart's the best deal. And so when people are getting hit by inflation, they're thinking, oh, I need to get the best price. I'm going to go to Walmart. Whether that's true or not is another subject, but that's the bottom line in regards to that. Now, Walmart valuation-wise, let's see here. I'm kind of curious. So Walmart, wow. I mean, geez, the Ford P29 on Walmart, that's really elevated. But the growth has been very impressive here. But we're getting out of the inflation cycle, right? And then the next thing we could be talking about is a deflation cycle. Not guaranteed by any stretch, but if we do get in a deflation cycle, that could actually very negatively affect Walmart. And that's why if you look at the Great Recession and the numbers coming out of the Great Recession, Walmart wasn't necessarily the most impressive stock, even though you thought, oh man, everybody's got to be shopping at Walmart because it's the Great Recession's going on, right? They didn't call it that at that time. They just called it a big recession. But yeah.
Let's get to the bail. And I should have known that it would be NVIDIA. We talked about it a couple of weeks ago before their earnings. They announced that 10-for-1 split back in May. The shares are up 40% since then. Since the split took effect this month, they're up another 8%. Don't know if you caught our conversation with Rich Bernstein, top of the hour, debating this very question. Do you stick with the leadership with the massive earnings growth, or do you go with the rest of the market? You've been clear on your views on NVIDIA. Why are you bailing here?
Well, I think you have to look at where everyone is listing on the boat. Right now, if you look, there are 89 buy ratings, 5 holds, and 0 sell ratings. And this is a company, when they talked about their stock split, which was needed, when they talked about their stock split, you saw the market move higher. It's up another 10% since that announcement after it actually split. So here we are, it added $1 trillion, Kelly. I think we're so conditioned to these numbers, but this isn't normal. I've been doing this for 30 years, and I know Bob Pisani was talking earlier about XLK. They're going to be rebalancing and moving up. But I think we have to understand.
Says the guy that just was talking about $91 billion for a burrito chain. Come on, man. Come on.
These names because the retail are going to have access to it. Let's take a step back and remember that the 10% of the wealthiest Americans, they own 93% of the stock market. So I think that retail input is a little bit of a misnomer.
But I will just tell you this. I was at a fundraising meeting the other night, and they said, where are we going to get the money from? And everyone said, you should get it from stock profits because that's all people have. And then people are piping up and saying, oh, yeah, all the kids at school, they all own NVIDIA.
Yeah, and no doubt about it, it has been a phenomenal stock, and it makes a ton of sense to own this. But I think at some moment in time, when we talk about how the rubber meets the road, this stock's up 800%. So I think we have to be considerate that the air may come out of the balloon.
Once we see a major deceleration in growth rates, then we can talk about NVIDIA is going to go down big time, right? So, I'm looking to get out of NVIDIA probably, 4 trillion-ish area, but we'll see. We'll see, okay? All right, guys, appreciate you joining me. Much love as always. If you're looking for access to apply for access to 1000xstocks.com, I'll put that as the pinned comment down there today. If you're looking to apply to join a private group, check the description area of this video. You'll see an application in there. You can click on that and go ahead and fill that out. That's for access to all my best courses, my Discord chat, all that sort of stuff. Much love and have a great day.